Hey all, today I'm bringing you another update on the possible housing market crash, and this is a really big update today because mortgages have returned, and this massively impacts whether the housing market is actually going to crash or whether it's going to be able to weather the storm and keep prices exactly as they were before the lockdown started. But before we get started, be sure to subscribe to the channel if you haven't already for more content just like this. Now let's get into the video. So it was announced yesterday that Nationwide and a few other banks are bringing back 90% LTV mortgages for first-time buyers, and this is actually a massive deal. So let's talk about why. Since the pandemic really took a hold of the world in March, lenders have been cutting more of their riskier products from the shelves, such as the 90% and 95% LTV mortgages, because naturally customers are using a smaller deposit and therefore it makes them much more susceptible to movements in the market. This increases risk for the lenders because obviously they're having to put more of their money in to fund a purchase. And obviously if the market drops by say 10 or 20%, the bank aren't going to be able to get all of their money back if the customer can't continue paying the mortgage and they have to sell the house to try and repay the loan. Obviously if the value of the house drops by too much, it's not going to repay all of that loan and the bank are going to take on heavy losses. As a result of the pandemic, most lenders actually stopped lending on their 90 and 95% LTV mortgages to reduce their risk in case the housing market did fall. This means that obviously if you wanted to go and buy a house in March, April, May or June, you had to have a much bigger deposit, like a 20% or a 25% down payment. This could have caused a really big problem because obviously a lot of property sales are sold to people like first-time buyers that only have a 5, 10 or 15% deposit, and this therefore would have caused the number of housing sales in the year to fall massively. On the flip side, as in the opposite of demand being supply, supply has stayed the same, if not potentially increased a little bit, because obviously a lot of people have been put on furlough, if not potentially, unfortunately, lost their job. This is going to have caused a lot of people to sell their home in a panic or to downsize to kind of insulate themselves and protect themselves from any potential job losses. This combination of oversupply of houses onto the market from people losing their jobs and the undersupply and demand from the lack of availability of funding to first-time buyers could have caused a real issue, because obviously sellers would be scrambling over each other to list their property at a lower price than everyone else to make sure that it sells really fast. This could have really driven a housing market crash. If everyone out there was just undercutting each other to get the fastest sale price, this would obviously cause the average property sale price to fall massively. But it looks like, as Nationwide have returned their 90% LTV mortgages for first-time buyers and 95% LTV mortgages for existing buyers, that this issue could be avoided because obviously loads more funding is going to be available for first-time buyers and people that just have smaller deposits, so they can still go out there and purchase a property. Sources are also showing that buyer demand is up 12% on this time last year. I guess as people have been stuck inside for extended periods of time as a result of the lockdown, they're itching to get out there and live somewhere new. Maybe a change of scenery, or a move away from home, or just for other reasons. Over the last few years, buyer demand has been suppressed due to political uncertainty as a result of Brexit. So I'm not really too surprised that buyer demand is up. But obviously, buyer demand being up is a good thing for the housing market. It's yet to be seen what impact will be had as a result of the expiration of the government furlough scheme, because obviously this is starting to phase out in August and will be fully phased out by October. But it does look like that millions of people have already started going back to work. If you've enjoyed the video so far, be sure to leave a comment below letting me know what you think about these mortgage products returning to the market, and also whether you think the housing market is going to crash or not. Obviously the construction industry has been back at work since May, and the restaurant and hospitality industry have been back at work for a few weeks now, and the government have announced discount measures to kind of help this industry grow and return back to normal as fast as possible. Over the last few days, Boris Johnson, the Prime Minister, also announced that people in other industries like finance and sales could go back to work in the office if they think it's safe, and therefore it's quite likely that shortly everyone will be back at work. So I do think there is going to be some fallout of business failure, because we've already seen quite a few high-profile business failures already, such as Flybe, Thomas Cook, TM Lewin, Hertz and many more. This is therefore going to cause some redundancy. But interestingly, a lot of these employees have actually already been picked up by other companies. For example, Hayes Travel just snapped up all 555 of Thomas Cook's high street stores and managed to retain almost 100% of its workforce. So hopefully the wave of unemployment won't be too big, as most people will have gone back to work before the furlough measures expire, which means that hopefully there won't be as many business failures as first thought. But unfortunately, some people are going to lose their job or may have already lost their job, but hopefully it won't be on the same scale as first thought back in kind of April and March time. In the US, we've seen unemployment figures fall from highs of around 15% to around about 11%, which is a very positive move in the right direction, and it seems to be falling at around 2% a month. So obviously if we can continue this, that means by the end of like July, it'll be around 9%, by the end of like August, it'll be around 7%, by the end of like September, it'll be around 5%, which is obviously very positive. As there hopefully won't be as many people losing their jobs as first thought, this means that there hopefully won't be a huge supply of homes onto the market. There won't be a huge supply of people selling their properties in a panic because they've just lost their job and they need to afford necessities like food and water. And there hopefully won't be a massive supply of people selling their properties in a panic because there's a housing market crash just around the corner. The Chancellor Rishi Sunak also just announced a temporary stamp duty holiday, which had a massive impact on the housing market as well. Previously, if you were purchasing a home for under 125k, you'd be paying 0% stamp duty. 125k to 250k, you'd be paying 2% stamp duty. 250k to 925k, you'd be paying 5% stamp duty, and so on and so forth. This obviously leaves most homeowners paying at least 2% stamp duty on the purchase of their property. And this means that if you're purchasing a property worth £500,000, you'd be paying probably around £15,000 of stamp duty. Obviously slightly lower if you're a first-time buyer, but it's still a lot of money. However, now if you plan on buying a property before the 31st of March and it's going to cost you less than £500,000, you don't have to pay a single penny of stamp duty, which is obviously a massive saving. This caused Rightmove, the property selling portal, to receive a record number of hits, with 8.5 million views in a single day, which obviously therefore led to more inquiries about new build homes and more inquiries direct to estate agents. If you've made it this far into the video, be sure to check out some of my other ones. Maybe some of my videos on the potential housing market crash, so you can get a full understanding of what might or might not be happening. This stamp duty holiday, which has really increased demand, kind of goes hand in hand with the mortgages returning, because obviously it means that pretty much anyone can go out there, take advantage of these new loans and scoop up a property. Therefore, there's not only a strong demand for properties, but there's also the availability of funding there to purchase them as well, and hopefully there's not going to be a huge supply of homes onto the market. Now, unfortunately, we don't know what's going to happen with the virus going forward. A second wave has almost certainly not been ruled out. The number of new virus cases in Florida has been increasing pretty rapidly since the end of June, and actually the number of new virus cases in the entire of the US is increasing almost daily. However, on the flip side, the UK is seeing a really nice reduction in the number of new cases. Since early May, the number of daily cases has been reducing pretty much every single day. Now, I don't really know why the US is seeing more and more cases every single day, whereas the UK is seeing less and less cases. Maybe the US relaxed lockdown measures too early and could be due for a second wave. But from looking at this graph, it seems less and less likely that the UK could be due for a second wave, although I wouldn't completely eliminate the chances. A second wave could have disastrous consequences for the housing market, because obviously if the country or the world gets thrown into another lockdown, that means people aren't going to be able to go out there and work, and it means people are going to be at risk of losing their jobs once again. And it's quite unlikely that the UK government would be supporting the country with another furlough scheme, meaning people are going to be more at risk of losing their job and having to sell their property to afford the necessities. This would likely cause a housing market crash, as there'd be a massive oversupply of homes onto the market from people losing their jobs, and a massive undersupply in demand because no one would have the money to go out and buy a new one. This would obviously cause homeowners to be scrambling over each other to list their properties for lower and lower values to try and sell their property to be able to afford the necessities. But hopefully it doesn't come to that, because obviously a second wave would be disastrous not only for the housing market but also for humanity in general, because thousands and thousands more, if not millions of more people would pass away as a result of a second wave, which obviously no one wants. As always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell. That way you'll be alerted when I upload a new video. Cheers!